Yo, 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 yo. Hello, hello, hello. Oh, yeah. How's your mum? I like dogs. Yo, yo, yo. Hey, welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders stationed around the world. Today we'll cover technical analysis, fundamental analysis, trader psychology. We'll do dollar pairs like euro dollar, pound dollar, Aussie dollar, Kiwi dollar, Canadian dollar, Japanese yen maybe. So euro yen, pound yen, Aussie yen, Kiwi yen, so on and so forth. We'll also cover gold and oil and Bitcoin, maybe even USD Mexican peso. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. My name is Wayne McDonald. I will be your guide on this journey we call Forex. Been doing this for about 20 years, so hey, feel free to learn from the things I've picked up as survival tips, but you can also learn from the mistakes I've made over the years. I'm that battle-scarred NCO that somehow you just can't kill, so you can pick up a lot of survival tips from me, and I'm happy to share. The overriding goal is for me to teach you how to plan for the future, whether that's later today, tomorrow, the rest of the week, next week, the rest of the month, the rest of the year, and that is a combination of technical and fundamental analysis. Strategy first, then tactics is the name of the game. So ask questions, get involved, take notes, so on and so forth. Treat each other with dignity and respect in the chat. Okay? If you're plugging your own channel or you're selling a service, we're not interested in your nonsense. Cool. That's it. I'd like to thank Traders Way for being part of our community as well. The idea here is when you feel ready, that you have developed the skills and confidence you need to be to trade real money, that you'll already have an execution partner that has earned your loyalty and respect. So, tradersway.com, bottom right-hand corner, start with the demo. Thing is, you're going to find fast execution speed, competitive spreads, but very big swaps, and that's a very good thing for a Forex trader. But ultimately, trust is what we're talking about. And they've earned mine, so tradersway.com. So where are we in the world? Well, today is the first day of the Fed meeting. So what do we got? Dollar strength, yen strength, and Swissy strength. Okay, that's all risk off. And everything is sort of gone, right? Like Aussie's down, pound's down, Kiwi's down, CAD's down. And euro being the anti-dollar, well, just kind of doing its thing. So anyways, I don't know. Be careful. The day before the Fed announcement might be a dangerous day. I don't know. Just saying. Be careful. But we do have news in the world. Take a look at today. Today is going to be the day. Okay. There we go. Retail sales. We have PPI and retail sales coming up in this New York session. So that should add some volatility. Okay. And again, what I was saying yesterday is a good number or a bad number. People are going to freak out, which means volatility, and say, oh, the Fed is going to do this or the Fed is going to do that. Well, the Fed is in their meeting today. They're busy doing Fed stuff, so they're not even watching retail sales, nor do they trade one-off releases. So they're already discussing the trend in retail sales. Pastward, but also looking forward. Okay, so that's what they're doing today. And then they're going to discuss tomorrow. Discuss their response to the scenario and make their decision known. And like I've been suggesting, I think they're going to hint about the taper. Good. Yeah, Rissard says, interesting RBA. Yeah, okay, so let's do that. Where'd it go? I had it out. It's gone. Where did it go? Maybe it's over here. Form. Oh, there it is. All right. There it is. Minutes of the monetary policy meeting. Look. Get straight to it. International economic developments. Done. But you're not reading this, huh? Amazing. Look, it's not even what? It's 3 pages, maybe. Okay. Then you say, well, Wayne, I can't find this information. So you go to Google and you say Reserve Bank of Australia. Brings up the website. You click on the thing right on the head, and boom. Look at that. What did it take me? 4 seconds? Oh, but wait, I don't have the time to read 3 pages. So anyways, good morning. That's the bitch slap of the day. You're supposed to be doing this work. It's very, 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 very easy. And I don't have any empathy if you don't do it. Cool. So going on to today, we have... right? We have that retail sales. So that's going to be at 8:30, and that's going to add some volatility, okay? So I'm just trying to hang on. Get through the still of the night. Okay. And then the announcement being released tomorrow, and that'll be the more interesting thing. So I'm just trying to get through this. Again, sort of Aussie's been down, Pound has been down, Kiwi's been down, CAD's been down. This one I'm a little surprised by. So, you got to be careful. You might be trading when you shouldn't be. Anyways. Take a look at here. This is what we've been watching several weeks now. This is heavily based on seasonality. Here's the price action of yesterday. Okay. This is the breakout, retest to 70 and long and gone. Very cool. So one would think the Canadian dollar would be strong. One would think that the Norwegian kroner would be strong. But and that hasn't necessarily been the case. So very, very interesting anyways. Okay. So in terms of dollars, prices for oil are going up and dollar strong. So this is doubly impressive. Doubly impressive, right? Cool, right? Take a look at our gold. Yesterday we talked about the plausibility of this counter trending back to 1883. Pretty cool, huh? Isn't that neat? Now, the rule here is not that it will, because actually what I say is I don't really know. Okay? I don't really know. The most important part of it is when you're here, you have the fortitude to take profit like you're supposed to. That's the big news. And it can go to here, but it doesn't have to. It can go higher, or it may wimp out here. Those are the things I don't know. It depends on a lot of different things. And this isn't specifically gold. I'm just talking about the counter trend. Okay. But it certainly can. So the idea, what I'm trying to give you is when you're down here and you made too much money too quickly, that you have the strength to get out. Okay. Also, I don't generally, if ever, trade the counter trend trade. What I was discussing yesterday with you guys is these are take profit zones, not entry zones. So they're exit zones, right? So this and then out is the idea. Cool. So that was a pretty strong counter trend move right after I reminded you of the pattern. Isn't that cool? Because if I recall, yesterday we were like exactly on that red candle and all of a sudden, boom, green. Nice. So remind yourself of why that pattern takes place. And then, of course, you can see Brent, Oscar Mike as well. And so you would think not only Canadian dollar, but Noki would be heading down, and we're still stuck under plan A. Okay, still stuck under plan A, and it's not playing nice, is it? So this dollar is very, very, very strong. Very, very strong in the moment. Huh? So we wait. Cool. I'll drag this out just in case. I'll drag that out just in case. Cool. Hey, do you guys want to meet up in Las Vegas in September? How many people would fly out to Vegas? We do some sort of get together. I rent a big room and we all get together. We do something, everybody gets a tax write-off. I think I have to spend like $15,000 on the room. But if 15,000 people show up, it's just $1 each. So I used to every year at that conference do a boot camper jamboree, and people would fly from all over the world. We'd get together, and it was just a fantastic time. Made us like, I don't need to be vexed. Right on. Oh, it wouldn't be much, Ronald, but yeah, why not? Just a thought. The conference talked to me, and I've been telling them no for about 10 years. No, I don't want to go. No, I don't want to go. No, but I thought, well, maybe we're overdue for a get together. That's all. Yeah, like I said, we used to do it every year, and I used to spend, I don't know, something like a couple $100,000 a year going to these conferences. I lost all of it, like none of it ever made money, but it was just something I did all the time, and we had a good time. And I'm just wondering now that my kids are a little older and stuff, I've taken 10 years off. Maybe it's time to do it again. I don't know. Cool. That's right, Kev. Okay, so anyways, just a thought. I don't know. They want to talk. I don't know. I hate talking, but they want to talk. I just wasn't sure if, like, if we can get, let's say, 200 people to show up, cool. Maybe we do something, right? This is it, Ronald. That's it. This is all I do. This is all I've been doing for a very, very, very long time. Okay. So anyways, I'm surprised by both the Norwegian krone and Canadian dollar. I find it, so again, this is telling me that there's some dollar strength here that's based primarily on this Fed meeting. Okay. Ronald, my YouTube screens make me $2,000 a year, maybe. I don't know. Ronald, no, but thank you. I sense some skepticism about that, so okay. All right, so let's go back to Rand and see where we are in this cycle. Holy smokes, right? So the interesting thing is way back in, what is this, middle of March? Beginning of April, we were targeting this 1350 or something, and it went a little lower than that, but about that, which is kind of interesting, right? Kind of interesting based on how far back that was. So now I'm waiting, just waiting. Again, this is to me all about the Fed meeting. So we've had our 382 Fibonacci retracement. Nothing fundamentally has changed. We are expecting a potential announcement or leak or hint towards a potential change, like future guidance for a change in the central banking policy in the United States. And that's what this is coming from, right? Right, Ronald. Okay. So, right, again, I sit and I wait. So what do we know? Well, we know I want to be a bear, or that I am a bear. Okay. The second thing we know is, it's not perfect, but I'm still under the M3 on the weekly. I'm still below the central on the monthly, and I anticipate this move here based on the Fed meeting. Okay, so what I'm hoping for, because I don't know how the market's going to react on the short term. I know what the market's supposed to do on the long term. I don't know how the market's going to react in the short term. I don't believe in a taper tantrum. If we're talking about the old taper tantrum, then why would there be a taper tantrum if we already are talking about a taper tantrum? But I remember the taper tantrum when it happened back in 13, I think it was. I was there when it happened, and I was shocked because I'm like, well, why the hell is everyone shocked? I was shocked that people were shocked because we knew it was coming for months. So it was really strange, right? So, anyways, this is what I'm trying to build. Okay, that's all. Okay. So, I'd like to welcome back our friend, Mexican Peso. Okay. Okay, and so we're back at 20, and I am very interested at this price. And you may recall, even though I haven't really covered peso for a few weeks, you may recall that I would like to see Mexican peso over the course of the next several years to drop down to at least 10, maybe 8. And that's pretty bold since we're at 20. Okay. So I have that in the back of my mind. This is at 20. 5 years from now, 10 years from now, it could be at 10 or even 8. Okay. Can you see? Can you see what this peso's done to me? Okay. So anyways, that's, yeah. Okay. Be interesting to see how we could roll this over. I see this as money flowing to the United States. Oh, I wanted to cover that today. Wait, I was going to... Maybe I can think this one out loud. I don't know which Fed... what Fed site is it on? Bond purchases by international investors. No. Direct foreign bond, no. Oh, man, I don't remember. This isn't quite it either. Oh man, I can't think of it. I have to Google this around. So the Fed is going to announce, I think April. Is it May? Maybe it's May. Foreign purchases of U.S. Treasuries. And why would I care about that? Stocks. Okay. Oh, no. This is Waldorf Astoria. That's the logo. Sorry. Yes, that's right. Because if foreigners are buying the stock market, if foreigners are buying treasuries, if foreigners are buying bonds, they have to buy the US dollar first. Ronald, I feel like you're distracting people. If you have a problem, I don't know, but try not to like fork off side discussions of whether I'm a real legitimate person or not. Okay. I'd rather people be paying attention to the flow of money around the world for investing purposes. Okay. I don't mind your skepticism, but I don't like people sidetracking the conversation. Cool. Yes. So Mohammed says, yeah, so this is demand for US dollars, right? Ronald, there's no value, so don't worry about investing your time. It's free, so there's no value. Okay. So what we are trying to see, and you can look at this table, and this one I'll give you because it's not as easy to find as some of the other stuff, like, right? Cool. So in this case, what we're trying to see is over time, has there been a change? You know, so you're looking at the delta here, the delta, right? What is it? Old minus new over new, something like that. You're looking at the change. And if we see, for example, more foreigners are buying Apple stock than before, they're demanding the dollar first. And that's what's creating the increase in value. So the thing that we track, okay, the thing that we track is the, oops, why did that get so big? Is the U.S. investors buying international, okay? But we also have to track how much international is buying USA, okay? And it's similar to this thing of exports minus imports, right? So you could think of it as you're exporting U.S. stocks, you're exporting U.S. treasuries, you're exporting U.S. bonds, okay? And, right? And, of course, when we send things overseas, we receive dollars, okay? Right? Right? You see, if we're exporting stocks, so a foreigner buys Apple stock, they now own it. It goes to the foreigner. If a foreigner buys a bond or a treasury, right, you can almost think of it as a bearer bond that sits in their bank account somewhere, but they had to give up something to acquire this asset. They had to give up their local currency, exchange it for US dollars, which means demand for dollars is up. And then you say, oh, well, that's why the USD is strong. Okay? And that's what we're looking at. Okay? And right now, the 10-year T-note is at 1.48, I believe. Oh, went up since earlier. Okay, 1.49. So the interesting thing is what? Well, that's pretty high compared to the rest of the world, right? Right? So are foreigners locking in the 1.5? How about this? Let's do this one. 10 year German Bund yield. All right, which one do you want to buy? Oh, thank you, Luis. Okay, so Europeans might want to, right, buy this, and so that's why you want to kind of track to see at what point does the dollar become a carry trade. Okay. Anyways, let's go over to euro dollar and see how we play this. Let's make this an hour, make that 15-minute, make this 5. Let's add longer term charts to this. I'm going to go swing trading bullish. No, I'm going to do position trading bullish on this one. And on this one, I'm doing swing trading bullish. And on this one, I'll do day trading bullish. Okay. Notice I have permission across the board to be a bull, but not at much lower of a price. Hua? Well, Luis, we already have inflation. Yeah. Okay. Okay, not a great number. It wasn't expected to be a great number. Okay, so retail sales released June 15th. Oh my God, that's today. All right, statement, blah, blah, blah. Okay. Let me zoom in a little bit. Okay. Cool. So here's the thing about sort of good inflation, if you want to think of it that way. Good inflation, people say, you know what? It's too expensive. I'm going to hold off my purchases. Bad inflation is prices go up no matter, even if purchasing falls. And that's usually like a country is printing money. So if you guys remember, right, the two first central banks, I think legitimate central banks in the world were the Riksbank and the Bank of England. And the Bank of England, for example, was created because someone said, hey, what's going to prevent the King of England simply from printing money? So, because then you could have no economic activity and then prices going up, right? And that's because you're just printing more and more money, and each bill or each coin is literally worth less than it used to be because there's so much of it. The quote that I often give comes from my venture capital background of every time you double production of a product because of the economy of scale, your cost per unit, right? Your marginal cost goes down by 30%. So if you double the value of the amount of money, you would expect at least a 30% reduction. But when you look at the quantity theory of money, it says if you double the amount of money, you'll have double the amount of inflation. All right. Well, good inflation it's really based on supply and demand, which is different from printing money or something, right? So if someone has money and they want to make a purchase, but everyone else is making a purchase, or, right, the same purchase, for example, or there's just not enough supply. So, for example, I bought furniture recently. And then they told us maybe by December your furniture will arrive. Then I bought a refrigerator. Okay. They said it would arrive 2 weeks later, and I'm like, I'm cool with that. I understand. And then the day before it was to arrive, I got a text saying there's a problem with the delivery and the shipment will be delayed 2 months. I'm like, wait, you knew you didn't have the refrigerator when you sold it to me. Oh my God, right? Problem with the delivery. Yeah, there's no refrigerator. Stuff like this. I'm also doing projects around the house, so I'm spending a lot on drywall and paint and 2x4s, and the cost of everything's gone up, but it's a supply issue. It's not necessarily yet the issue of too much money, okay? And that's what the Fed is talking about, transitory. So the good sort of inflation is when, if prices are high, you say, I'm not going to spend it this month. I'll wait. Okay? That's good, because you can't wait to pay for gasoline. You can't wait to purchase food, but consumption otherwise may have been tempered or tempered. So the enthusiasm has been tempered because prices have gone up, and they're like, okay, all right. So people are just holding off a little bit. And to me, that sounds logical, doesn't it? Okay. Cato wants to know books on macroeconomics. I would just take the macroeconomics course this summer. I don't know when we're going to do it. I don't know if we're going to do it in July. I don't know if we're going to do it in August. I'm thinking maybe August. But I'm sending my wife and children to the beach this summer, and I'm not going to go with them, and I'm going to stay home and put together some projects for you guys, or do things like I've done a sort of a dry run rehearsal of a macroeconomics course, and I like most of it, actually. I like it quite a bit. So it'd sort of be like a redo of that, but I also want to redo the central banking course, and which I did, I don't know, 5 or 6 years ago now. And I'd like to kind of redo that as well. So that's why I'm kind of staying home, because to me, I mean, I want to spend time with my wife and kids, there's no doubt, but also I get really bored. So like vacation, sitting on the beach, and then I'm like, okay, I want like 5 cocktails right now. And they're like, you can't drink, you're with the kids. And then what the hell am I doing here? Right. So I'm a busy guy, right? So to send them off for a while, I'll miss them, but I'm going to sit and work and do these side projects that actually make me quite happy. I love thinking, and I like planning, and I like doing, and all that kind of stuff. So that's kind of what I'll be doing at the end of June instead of going to the beach this year. So when are we going to do the central banking monetary policy lectures, and when are we doing the macro? I'm thinking maybe an August summer school. Okay. Can we do the masterclass for raising funds? I would like to do that. Yeah, I would like to do that too. That's another thing that I would find just fun and rewarding. Right? So, but probably not this year. Okay. All right. So Mr. Kennedy says, if there's a lumber shortage, right, isn't it really a similar situation on how tankers proposally stay out at sea for an extra week? Yeah. Well, it's not to necessarily to inflate prices, Mr. Kennedy. In that case, they're waiting for prices to go up. I know it's sort of the same, but it's the same thing, only different, right? It's more of a timing issue. Usually they stay out at sea because prices have dropped when they were at sea, and they literally can't afford to unload the cargo because they would lose money. And there's also, when you look at standby letters of credit, SBLCs, that are used in global trade, there could be a situation in which the asset has dropped, and the terms of trade may not be advantageous. Long story short, they can't afford to unload it till prices go up. And if you're losing $100 million a month, paying $1 million a day to keep it at sea, so that prices might go up $4, but the $4 might cover, like the difference in $4 is a lot, right? So anyways, right? So there might be multiple reasons to keep like a tanker at sea, but it's not to inflate. They're more like on their hands and knees begging for prices to go up. Okay. But ultimately, I don't know the psychology of somebody doing that. Although I do know people that own oil storage facilities in Europe, in the Middle East, and some in the Caribbean, actually. So I could talk to somebody if we needed to about that kind of psychology. Okay. Mohammed, no, I do not expect the need to change my outlook for the Fed. I use technical analysis to confirm or deny the market conditions. Okay, so let's go back to where we are. Okay, you can do the retail sales yourself. Hang on. Let me bring this up. Do you guys want the retail sales? Okay, go ahead and read this. So anyways, the negative number is actually okay with me is what I'm trying to say. They're not actually Saudi. The guy I'm thinking about lives in Dubai, but he's Dutch, which is funny because another friend of mine lives in Dubai and he's Dutch, but it's not that guy. It's the other guy, but they know each other. Yeah, like if we needed to talk to a storage guy, we could talk to a storage guy. Two people I know from the same board, but they sat on the board different years than me and from each other. But I was at a dinner, many years ago now in New York City, and it was after a board meeting, and I think I was attending the board meeting as a guest. Anyways, so they're like, oh, let's all go out for dinner. I mean, that's the whole reason you go to a board meeting, right? So you can go out for drinks after and actually just talk. So anyways, so we're at this fancy Japanese place, and we're having a good time, and they're sharing iTunes MP3s, which tells you how long ago it was. But these guys hit it off. And I'm like, what are you guys talking about? And he's like, oh, I own a seaport, right? A port. He's like, I own a port in Seattle, and he owns a port in New Orleans. And they're like port buddies now. And I'm like, wait. Let me think this through. I owned a boat once, and that was expensive, and I would never do it again. I know some rich people, like, they buy yachts or super yachts or ultra super yachts. But you sons of bitches own ports? You own a port? Yeah, I own the port in New Orleans. I'm like, so anyways, this guy owns a port in Seattle, and this other guy owns a port in New Orleans, and I'm like, oh my God. So, what billionaires do. So they're billionaires, right? So anyways, so if we need to talk to anyone about, the economics and international economics of a port and stuff like that, I can make some phone calls. One of the guys lives in Atlanta, although he's probably quite elderly now. But I remember, again, maybe about 10 years ago, this guy was 70 years old or something like that, like not a spring chicken. And he was out doing segways and stuff in Washington, D.C. And I'm like, dude, most people 70 don't rent segways and to tour Washington, D.C. And I just thought that was super cool. Okay. Wolfgang is what? Are you giving a lecture or are you asking a question? Okay. Okay. So anyways, I'm okay with that. All right, so let's do this. So I have to wait here. This is sort of a temper your enthusiasm market conditions. I'm looking at market conditions. So let's start with what do we know? Okay? What do we know? This is today. Okay? So we know that you had an Asia trade here, and it went up to the conservative target of 121.44 and stopped. So the day trade is dead. You understand that? Okay. Yeah. I always find it interesting, Mr. Kennedy, if that's true. Like the idea that you're trying to advertise a service, but you don't have any money. So I find it sort of a strange style of marketing. I guess it's guerrilla. It's guerrilla. How to get users on YouTube. Spam people in other people's streams. But anyways, cool. Okay, Ronald asked an interesting question. Right? When the Federal Reserve adds money to the market in the form of quantitative easing, how does it get the money out when inflation does get high? Okay. Well, so you might hear Grandma Yellen, now that she's at the Treasury, talk about the Treasury and the Fed have tools to deal with inflation, right? And what she's telling you is they'll just raise interest rates. Okay? Cool. So that's one thing. Higher interest rates will cool off the market. Okay? I think, if anything, it'll fuel a massive rally in the real estate market. And I think bank stocks will also do quite well, but I've been buying European bank stocks and stuff. Just cool. Right? So that's interesting. And now the next thing they could do to take money out of the market is sell treasuries at higher interest rates. So, for example, if the U.S. Treasury came out right now and said they're willing to pay 2% for a 10-year T-note, you're going to lend them money for 10 years, you'll give up your money. Okay, now you don't have money, you have a 10-year T-note. But anyways, so that's another way of getting money out of the economy and cool things off. Okay. But right now, you have to think about it. The Fed has been trying for 25 years to get inflation, and they haven't been able to do it. So they're just in this wait and see mode to see if it can actually be created. Okay. So anyways, let's go with this. My point here is there was a trade today on euro dollar, and it worked out nicely. No, Ronald, they pay it. They pay interest. Cool. Okay, now let's look at this. Okay, this is the weekly trade. We know this because we talked about it last week. Okay? We talked about it last week when we were up here. And the plan for the week was to buy it down here and take it north. Higher than that, but north. And it was generally true, okay, until today. Do you think this move down here has anything to do with the FOMC meeting tomorrow? Well, it's today and tomorrow. Do you think it's related, or is this a random walk down Wall Street? Well, the other thing you can see is this is a beautiful sell zone. This is where bears would sell, by the way. Absolutely, 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 totally, absolutely. So you have to say now, is it bears selling? Is it people taking money out of the market and waiting for the FOMC? All that kind of stuff. Well, that's your decision, okay? This is a sell. There's no doubt that's basic technical analysis for a bear, okay? But this might be a day trade. This might be a swing trade. This might be a position trade. We don't quite know. Okay. The day trade is done. So I want you to remind yourself, this was a daily exit. We knew this yesterday. Okay. But also technically, okay, this is a role reversal. Okay. I think the way I'm handling this emotionally, if you will, is that this is range bound while we wait. And I still have this target of 1.2222 by Friday. Okay. Okay. Now, Morena says, I just see it as a strong dollar. That's perfectly acceptable. That's what this is. Okay. Now, very many people, however, they don't see the daily target. Okay? Even for a bull, which is dollar weakness, that is a target. That means out. But on a weekly basis, this is also very much a bearish entry. Okay? See, let me draw this for you in a different way, and maybe, right? Do you see how I have everything set up bullishly? There's no bearish setup here. Okay? But let's look at it from a bearish point of view. Okay? This is a sell zone. If you were a bear, that's where you'd be selling. This is a bearish sell zone. So that's where a bear would sell. And this is a bearish sell zone. Bears would sell that. So you have to get really good as a trader to see both what you want to see. And just as important as that is what a bear would want to see. So when you're in this period of not trending, and this is something I started about 2 weeks ago. I'm like, well, 2 weeks ago in the swing trading group especially, I spent a lot of time reminding people that it's not your fundamental bias that sets everything. That sets your bias. What you're supposed to do next is open up your charts. You use technical analysis, and very often it takes 1 second, and you say, are these market conditions technically conducive for what I want to do and achieve? Meaning, if you're a bull on euro dollar, do we have a bullish market? There's only one answer. It's either yes or it's not yes, because it could be no, it's sideways, or no, it's bearish, but no is no. Now, if it's sideways, you can buy as long as it's at the bottom and you're cautiously, right? Right? You're cautiously doing that. Now, if it's trending, oh my God, get in the game. Okay? So I look at this, and I am a bull. You know I'm a bull, and I've explained many reasons why, but I have a long-term point of view. Okay? The rest of the year, next year, the year after. So can you go through a 3 or 4 week period where it is not bullish, even though I'm a long-term multi-year bull? Oh yeah, but that's why we use technical analysis. So if this market is sideways, don't be aggressive. Don't have 47 trades a day and saying, well, Wayne told me this was going to go up. I'm supposed to be killing it right now. I'm supposed to be rich right now. Well, we have to use our technical analysis and say, well, we are bulls, but this market is not bullish yet, so we must temper our enthusiasm. So let me show you the quick trick here. What I was saying before, here's the bias pivots. Change it to bearish mode. Okay, who's in control of this market? That's very, very bearish. But I'm a bull. Do I look at this and say, maybe I'm wrong, maybe I need to be, right? Maybe I should be a bear? You absolutely can. That's what the technical analysis is telling you. I don't teach you to trade both ways because I find people that are learning how to trade in their first year, second year, third year, fourth year, they lack certain skills like analysis, like creating biases, like using the right kind of indicators at the right time, making the right kinds of decisions. I'd rather teach you to trade a bias and focus on consistency, right? And the consistency gives you confidence, and the confidence gives you, right? Like this process that is important. Okay? Now, down the road, could you see into this and say, well, consolidation is likely to happen because of the Fed meeting coming up, and I see this on maybe not the monthly charts, but the weekly charts, or maybe not the weekly charts, maybe the daily charts. Can you be a short-term bear but long-term bull? Yes, but I wouldn't teach that, because most people, if I teach that, try to do that in the beginning, but they don't have the simple skills, or let's say the complex skills of patience and discipline, doing the right type of work, making the right type of decisions, and consistently applying strategy, right? Now, once you figure all that out, yeah, you can swing both ways like a broken gate, and you'll do all right. You'll do good, actually. But it's funny to me to have a multi-year plan, but 8 days of mediocre market conditions, and all of a sudden you want to throw away your 5-year plan. I'm like, wait, I thought you had a 5-year plan. I do have a 5-year plan, but this has been bearish all week, so I'm over. Well, come on, dude. Okay, that fundamentals are long-term plays. What you should instead say, how does this fit on the longer-term chart? How does this fit with seasonality, for example? So, okay, I had a general plan for the rest of April, and I still would expect to see something like that. I have a general plan for August and September and October. I have a general plan for the period between Thanksgiving and Christmas. I have a general plan for January and February. So I'm going in with some of these generalized strategies on top of like super cycles, if you will. Not quite super cycles, but longer term business cycles, longer term real estate cycles. And this has to do with the flow of money and investment around the world. So I have all that set up first. And then I need to look at this and say, is this bullish yet? No. Okay. Now, what if, how about this? What if the Fed meeting has some sort of crazy reaction tomorrow, and it does this, and then we start to see this the following few weeks? Then somewhere in here, and somewhere in here, and somewhere in here, I am re-entering the market as a bull, because my primary bias. You see? And I know to be more aggressive here because I understand the reasoning. Okay? Right? And so I look at this, is this bullish? Well, right now it's not bullish. We have a top and we have lower lows. Okay? And then the roll reversal and then lower lows. Okay? And the roll reversal, and this is bearish for sure. Okay. Alton says, how do hedge funds do the long-short strategy? Well, first of all, my point is I don't teach it in the beginning, because most people that show up, they don't know how to trade. They don't know why to trade. They don't, they're coming from the beginning, let's say. Look, if you're a professional trader that's been in the business for 10 or 15 or 20 years, and you've raised a fund because you have a track record of success and a long pedigree of macroeconomic education and working at, a big Wall Street firm for many years, and you were the managing director of foreign exchange trading desk at Goldman Sachs, oh yeah, you're going to deploy a long short strategy. But for someone that walks in and they're at the beginning of like, what is Forex? How do we trade Forex? How do I create a business out of Forex, a career? What is macroeconomics? What is the flow of investments money? What is risk? What is, these are big questions. And to have someone do a long short strategy, what I find is people show up already doing that and they have very inconsistent results. So as maybe a coach, a mentor, or whatever, I would rather try to bring consistency to your trading first. Okay? Cool. So my point here is this is not bullish, right, guys? Could we agree on that? At some point, if you get a higher high, higher low scenario, because my bias is bullish, but the market is bearish, I get really quiet. But when this turns bullish, I'm a monster. Okay? Cool. And this is what I do. I say, oh, it's no longer bearish. I turn it back to bullish mode and I start to fire for effect. So if I get this next week, game on. You got it? Game on. It's like I'm just waiting. Okay? Okay. Okay. I had a question about swap and euro dollar. This is how you get the answer to that. And any other questions similar to that? What is the swap? Okay. Okay. You go to specification. If you're long, you're going to lose. And if you're short, you're going to win. You're going to lose more than you're going to win. Okay. But if you're short euro dollar, you'll earn interest. Yes. Not very much, but you'll earn interest. If you're long, every day at rollover, you'll be charged some interest. Okay? 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 And it's helpful if you're carry trading. But you'll see, though, that most things don't have much of a carry compared to the old days. But if you're doing exotics, for example, like peso, for example, okay, this is important because if you're short USD peso, you're going to make good money, okay, based on your leverage, because leverage enhances your profits. Okay. So your internal rate of return of collecting interest payments will be significant compared to other forms of investment. Now, if you're long USD, so you're buying USD, you're borrowing peso and buying dollars with it, that means you have to pay Mexico a very high interest rate. So you have to look at it that way. If you borrow money from the United States, okay, and then invest it into Mexico, Mexico pays you a high interest rate on the loan. They're like, thank you, we need the dollars, and we're willing to pay a big interest rate for it. And you're like, hey, no problem. Now, the cool thing is you might be leveraged 100 to 1, right? So you pony up $1 and you can borrow $100, and then you lend Mexico $100. They pay you an interest rate for the $100, but you only put up one. So now your internal rate of return on the loan you made to Mexico is quite high. Very high, in fact. Okay. Now, if you reverse this and you borrow a high interest rate loan from Mexico, and then you decide to invest into the United States with it that pays you zero or nearly zero, then all of a sudden that's a bad trade. Okay? So borrowing in peso to invest in the United States is a very expensive idea. You could probably go into the world and borrow money cheaper than what you'd have to pay Mexico. So let's just say, right, Mexico's charging 40 points, okay, whatever point is, right? Okay. And you could probably go out in the world and get that probably for negative 0.01. So you're like, okay, maybe you can borrow euro cheaper than that. But as far as payday is concerned, the interest you're earning from lending money to Mexico is fantastic. Okay? You'll earn more than 100% a year, sometimes hundreds of percent per year. And think of it as a bond, really. Okay? So, for example, let's do the same trade. Instead of being long, right? Oh, wait, we're going to have to reverse this. Hang on. So Mexican peso long, we have to do like USD CAD. I guess we could look at USD CAD. Okay. All right. So if you were long USD Mexican peso, that means you were borrowing from Mexico and lending it to the United States. It cost you 40 points. If you do the same trade, but instead you go to the Bank of Canada, borrow money from the Bank of Canada, and then take that money that you borrowed from the Bank of Canada and lend it to the United States, it's 0.3, not 40. There's a difference, right? Okay. Being short USD CAD is expensive. Yeah. So that's what these are telling you. Okay. So let's see. On this trade, this trade. Okay. On March 9th, I took $100 cash and I levered up. I borrowed money, right? I leveraged up, borrowed money, whatever. So I have $100 of cash, levered it up and lent it to South Africa. I've earned just about $40. Okay? $40 in interest. But I only used $100 of my cash. So since March, so all of March, all of April, all of May. So 3 total, right? I've earned 40% return on investment. Okay? I'm earning 12% per month loaning South Africa money. 12% per month. Okay? And I have a stop loss at break even, so I can't lose money. I will collect 12% a month, month after month after month, forever. Okay? Now, I also have $1,100 in profit because my asset has appreciated. Okay? Cool. These trades, okay, I've lost money, negative swap. Okay? Which is amazing because Aussie used to pay quite good, and now it doesn't. Okay? But would it make you not invest? You're like, "Oh my God, I'm losing, a half a penny a day." That's not even that much, but would it keep you away from buying Aussie dollar? I don't know. That's up to you, right? Okay. So here's the cool thing. We know tomorrow is important. Okay. We talked about tomorrow months and months and months and months ago. Wolfgang, well, you're not actually short USD. You're USD CAD. You're actually long CAD USD. Okay. Now Morena says she's a day trader, and she is long and short. Perfectly fine. In fact, all I've said is I don't teach you that for your first few years. You got to develop those skills. And not many people ever develop those skills, and they're better off fundamentally trading or swing trading. Okay? And many people don't want to day trade. They don't want to sit in front of the charts 8-9 hours a day. Okay? They just don't. Cool. Well, then you need to take advantage of patience. So that's what I'm trying to teach here. Okay? So cool. So I look at this and I say, not yet, baby. Not yet. That's it. It's fine. Okay? And I don't nitpick on people's styles or techniques or what tools they use. It's all good, my friend. I just want you to do your very best at what you do. And day trading, like, man, I spent a whole year trading just the 1 minute chart. Okay? Like, oh my God. So I'm not here to say day trading's bad. I'm just saying I'm not teaching you to trade both ways. Over the course of a year, okay, over the course of the year, there will be plenty of opportunities for bulls and plenty of opportunities for bears. Okay? Isn't that neat? Well, I wasn't trying. I mean, did I make money? Yes, but the issue was I was told it was impossible and I wanted to challenge myself. Okay? I wanted to challenge myself to see if it could be done. And the interesting thing is it reaffirmed the importance of long-term charts. The 1 minute chart. To remove the noise, for example, I would start on a chart like this, okay? And I'd say, all right, there's support, okay? And I drop into here, yep, there's support, there it is, yeah, okay? And I would be trading this on the 1 minute chart. Now, what most people do is they're all over the place. Okay, they're all over the place. Most people. Remember, most people lose money. So it's not the strategy that bothers me. It's that most people, quite frankly, are not very good at what they do. So they get caught up on the somehow you're going to trade your way into being a better trader. And to me, it doesn't work. So I do things like on the 1 minute chart, I say this is the double bottom. And this is where bulls would buy, bears should exit. Meanwhile, at the top here, we know bears are selling because earlier today, Bulls exited at the top. They see, again, you have to think about it. Earlier today, bulls did what they were supposed to do, and then they walked away as they were supposed to do. Bulls made money today. Okay? The second part is you need to understand that, and that it's now the bears' turn. This is really, really simple price action. Extremely simple price action on a 1 minute chart. Oh, it's all noise. That's what I was told. I'm like, really? It can't be all noise. Okay? But you have to understand that all bulls exited up here. So now it's the bears' turn. Bears take it down, and guess what? This is where bulls are. This is the only place on the chart today a bull could buy. So guess what? Guess what happened, right? Like, not a shocker. But many people will live on the short-term time frames only, right? On the 5 minute, 15 minute, and they don't realize that there's a bunch of bullish orders here. They don't realize there's a bunch of bearish orders up here, and they're just trading everything reactionary. Okay? Mohammed says it's a 50-50 market. So here's what I try to get you to as a first stage in the development of your career. Okay? There are plenty of times when bulls will have the advantage. There are plenty of times where bears will have the advantage. And if you just pick one team, you can plan in advance and let this fall so that you're ready, willing, and able to do this there if you're a bull. And over a very long period of time, by the end of the year, from J1 to J1, you can look back and know you know what you'll see? If someone was reading your trading history, because I'm also trying to train those that want to be professionals to be a professional. So you could give someone your track record and they look at this and say, you're short USD all year. And you're like, I know, that's correct. And they're like, well, why are you short USD? Well, let me explain. I've done analysis on macroeconomics. I'm looking at the business cycle. I'm looking at, the closing of the productivity gap and what the Fed was talking about as far as the overshoot. And when you overlap that with the value of the currency, blah, 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 blah. And you got this wonderful little speech. And they're like, oh, that's why you're short the US dollar. You have a fundamental bias based on macroeconomics and monetary policy analysis. You're like, I know. So now they say, well, that's really smart. And you're like, I know. Okay, well, let's look at your trading history. You're always selling the dollar. Sometimes you buy euro, sometimes you buy pounds, sometimes you buy Aussie, sometimes you buy Kiwi, sometimes you buy CAD. That's cool. And because you're always doing that, you have very low volatility because there's a theme. You're very thematic. You can explain why you made these trades. And then you can say, well, we'll talk about why so many Aussie trades and so many CAD trades. Well, at the beginning of the year, there was a recovery in oil and demand for commodities, so I was playing CAD. But in the second half of 2021, we saw a resurgence of global trade, in particular with China and Europe and China and the United States, and that led to an increase in demand for commodities out of the Asia Pacific region. And, so if you look at the export data from the Reserve Bank of Australia, I made those investments there. And once again, it's thematic, but what it ends up doing is it lowers your volatility because you're not long and short, short and long, and trying to catch all these timing. It's not a timing issue. Okay. Now, if you can afford to be a day trader where you're literally sitting in front of your charts, then you can take advantage of that and you'll get swings inside of swings. But I would never ask you to start there. Instead, in the first year, this is what you're doing. You're only selling dollar. You understand why you're selling dollar, but you're using technical analysis not to look for trades. Hey, do we have a trade? What's a trade? Are we in a trade? Give me a trade. What's a trade, Wayne? Instead, you're using technical analysis to confirm the market conditions, to say, is this a good time to do what you already want to do? You don't look at your chart to tell you what to do. You look at your chart to say, are these the market conditions that I'm looking for to deploy my capital? Okay. By the end of the year, you're only buying euro dollar, and let's say you're only buying euro dollar in market conditions where euro dollar is clearly bullish. You're only buying dips in a rally. Yeah, you might go 3 weeks without a trade, but at the end of the year, no one will care. Do you understand that? At the end of the year, no one will care. You made 2% this month, 4% that month, 1% that month, -1% that one, 4% that month, 2% that month, 8% that month, -2 that month, and at the end of the year, you're like, oh, you outperformed the you're not supposed to benchmark, but let's say you outperformed the S&P 500, but with lower volatility. And people look at your trading history, and because it's thematic, they understand what you're doing. Now, you don't want to just be long euro dollar all the time, but you could be, again, long, you're buying euro, you're buying pound, you're buying Aussie, you're buying CAD, you're buying Kiwi, you're buying peso, you're buying rand. Meanwhile, every single trade is short the US dollar. And they see you now as a balanced portfolio, not as a long short portfolio. Okay? Now, you do that for 2 or 3 years, and you also want to have a long short portfolio. If I were me giving advice to you, so if I sat on your board, okay, I would say you should have a second fund. So do another raise. So you do a raise for your thematic trading, get a few years under your belt doing that really well, and then start a new fund, raise new money, find new investors for your long short fund. But I'm telling you, the consequence of that is going to be a higher volatility, and it'll be much less thematic. So now it's very price action based. It's much shorter term based. There's lots of relative strength. So pretty soon you're going to be like short euro Kiwi, that kind of stuff, which in what I'm teaching you, this thematic global macro trade, you don't do euro Kiwi. It doesn't make sense macro wise, but it might make sense based on relative strength, which is much more day trading long short. And that's wonderful too. Okay. I'm telling you, that's wonderful too. I'm not knocking that down. I want you to be able to do that, but I wouldn't teach it first. Okay. Okay. But can you do it? Oh, that'd be great. Okay. Hey, by the way, thanks, Jim. If he's a problem, get rid of him. How many warnings does one person need? Okay. Cool. No, I ain't got it. You the man, Jim. All right. Cool, right? So, right? So like Marina is an excellent trader, day trading. I'm not so bad myself, but I wouldn't want to compete with her. I'd rather hire her. And then she's like, you can't hire me because I'm too good of a day trader. And that's the problem you're always going to get. You're always going to get that. She's like, I don't need you. I make money, I day trade. I show up, I love what I do, I'm good at it. And boom, I make money. Then all we can do is get together and party. All right? See you, right? See you in Cape Town. Yeah. Yeah. Cool. All right. Okay. So patience, grasshopper, patience. Charlie's like, hell yeah. Hey, Charlie, you asked a question earlier. Did I answer it? Remember your name popped up when I was reading. If not, ask again. Yeah, Brinsley cannot afford it. That's how it is, right? Yeah, yeah. Oh, you will work for me as a day trader? Cool, cool. Yeah. Yeah. My name's Charlie and I like to party. Cool. Yeah, Marina, do you have a lot of African connections? Kenya? Do you know people outside of South Africa? We do a road show, raise an African fund. Be really interesting if we could do like, can we invest into African currencies only? That'd be an interesting take. What an amazing exotic portfolio that would be. Oh. All right. Tanzania. Yeah. Yeah, Africa's complicated. Most people don't have any money. But then when you reach people that actually have a lot of money, they do a lot of weird things. And then all of a sudden you're like, you know what? I can't do any of that. I used to get that a lot in the Middle East. I've had many conversations. I remember one time the guy's like, I love you so much. I'm going to give you all this money. And I'm like, okay. He's like, it's going to be great. We're going to take over the world. It's going to be so good. We're going to make all this. And I'm like, whoa, dude, whoa. Settle down, son, settle down. And then, so he brings in a big investor. And then I'm like, and it was much more realistic. The investor was much more realistic, right? And all of a sudden it was a very quiet conversation, and which I like because, anyways. So he looks and he's like, okay, he explains. Finally, he leans forward and he's going to explain to me how we're going to make the money, right? He's like, okay, so you're here, right? And we're going to invest, but the money is here, so it's going to go to this bank, and then this bank, and then this bank, and then, my limo driver, and then his cousin, right? And his girlfriend, and then through this other sketchy bank I've never heard of. And then it's going to go to you. And I'm like, yeah, pass. Pass. So it's funny. And I find that very often Africa has problems like that too, where the people with money are doing, interesting things. And I'm like, dude, I can't get involved in that, man. I can't get involved with that. How about you send it to a bank in Switzerland? Oh, well. No, well, let me explain to you. I got my money tied up in platinum right now, and so I'm going to have to, do a bank letter of credit, and then with this and that. I'm like, not interested, bro. Good luck to you. Okay. Mr. Kennedy says, hey, would you agree that it seems like intraday trading is a bit dangerous until the Fed does a thing? No, no. Like I'm showing you guys. Okay, I'm showing you on multiple time frames. I know exactly where people are buying. Okay, so if you were long at 21, which was the plan on last Wednesday, then your stop is where your stop is. Okay, so now if you just bought it, your stop is at, move your stop, put wherever your stop is, and stay with the plan. And if it works, if it works, it works. If it doesn't, you'll lose a little bit of money. You understand? This is why you have plans. Okay? This is why you have plans. And you have to understand where you fit in the plan. So the long term, you're good here. 121 is the number. But we're in a falling market currently. Cool. Do you have a day trade? Yeah, do the day trade. Why? It's sitting on top of the monthly and the weekly opportunity. There's nothing but green lights, right? There's an old thing from Forex Made Easy called the big light strategy. And all that means is, you have MACD crossed up on multiple time frames. Well, look, you have a green zone, you have a green zone, and you have a green zone. By the way, they're not the same green zones. They're not the same. But if you were a bull, for whatever reason, because you're a nutcase, doesn't matter. You have permission to fire for effect. Green, right? Green across. Great. Now, if the Fed comes out and, right, I don't really care about the day trade because, first of all, that's already done. But this is the issue. Well, if we're down there, I have to back away. You see? That's all that means. That's what technical analysis has told us. Let me do this on a 4-hour and then zoom in. Okay? Great. What does this tell us? This tells me that it's going to do this, and that's all I have. And I can see right now it's dangerous. Okay? Why is it dangerous? Because do the statistical analysis. Y equals mx plus b. M is less than 0. Therefore, I'm cautious. That's all. Okay? Look, it's trending down. So, I can buy here and I can buy here. Do you understand? Like if you do go through my training courses, those are the only rules of engagement I give you. There isn't anything else to do. So what if it's down here? Well, then it's a bad opportunity. You might have to wait an entire week to get another opportunity. Yeah, but there's 52 weeks a year. What do you care? Okay? This is why you want to make, like, let's say 3% a month. Not necessarily 1% a week. Because there might be weeks in which you shouldn't be trading at all. Generally not, though. More like there are weeks in which you should be very cautiously entering trades and very critically managing your stops. Mr. Kennedy, it's statistics. Take a statistics class. Okay? That's where you get that. Okay? The Y and the X's are the axes. The M is the slope calculated by rise over run, and B is the intercept. So just high school statistics would do it. There's probably plenty of places you can get that. Okay, so I look at this and like, I'm a bull, but that's not bullish. So I know how to chip away at this. I can, right? This is my price, and this is my preferred price action. Okay, that's on my weekly basis. So it looks like maybe if things go well with FOMC, okay, I might get a dip like this next week. Cool. Okay, cool. That's how I use technical analysis, y'all. Okay, this is how I trade a 5-minute chart or a 1-minute chart. Okay, some people might be amazed by that. There might be some YouTube channels that would go ape crazy on this. The way I look at it is, yeah, of course. Okay, and I see it over here. Well, I guess now I have to zoom in. Okay, versus that. Cool, cool. Just quickly take a look around here. Peso already covered. Let's do a couple of crypto. So yeah, I'm up at the logical target here. Okay. Going to move my stop loss to break even. Cool, right? I'm going to adjust the roll reversal off the side, right? I mean, we got this, but it might be playing out like that now. Right? Richard, oh, going back to the other thing. It looks like, you mean, are you talking euro dollar? Or are you talking about Bitcoin? What I'm trying to say is, if you're thinking up and it looks down, be very cautious. Keep your powder dry. Mohammed says, is this a chance to enter? Well, you're right. You would have to call that support. And you're playing the roll reversal off the psych level. So to me, it's very short term. I don't know. Like, I don't know why you'd wait for it to get to 40,000 and then try to do something. So I'm not sure, but I guess if you're in the shortest of terms, you might be trading it, what, off the hourly? The 4 hour says 38, right? So again, are you day trading this? Okay. So I like stuff like this, right? The inverse head and shoulders idea. Okay. Up, 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 down, down. Okay. Up, 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 down, down. Up, 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 up. Is it going to kick off of 40? Yeah. I wouldn't call it the world's greatest opportunity. I mean, all you have is the psych level on that. But I always scratch my head like, why would you wait now? But I guess because you think it's going to go to 50. I'm not sure. I don't share the logic. But if you explain to me, as I explained to you, that a purchase here predicts this. Okay. I think technical analysis would tell me something like this would be a better move. But could you buy the dip at 40? I'm not sure. I mean, again, you'd have to consider it as a break retracement. But, or you just sort of enter scared, which means you just pop a trade and then very quickly move your stop and then very quickly just pray you don't get knocked out. Yeah. Yeah. Okay. So yeah, you're trading this now, right? My fear is people only do this, as I was explaining before, where I did really well in a 1 minute chart because I set everything up on a 4-hour chart and only entered at 4-hour support or resistance, ideally in the direction of my long-term bias anyways. Where a lot of people get in, they're like, it's a lot less certain what they're doing. So, but if you were forcing me to trade Bitcoin now, is this an entry? Yeah, this is you'd call it a roll reversal off the psych level. Okay. And then, of course, you have to pray that Elon doesn't send a tweet. But you're asking me like technical analysis, and yeah, it's pretty clear if that's what you wanted to do. This is where you do it. Okay. The second opportunity would be here. Okay. Any lower than that, and it's no longer trending. Okay. But this is how I trade a 1 minute chart, for example. You better be certain that this is going to go up. Okay? Now, if you're certain this is going to go up, then this is your buy zone, right? Do you understand? Well, Kennedy, that's how I teach people to trade. Okay, but if you don't know, if you can't explain to me what's going on just in on the pair itself, then 1 minute chart, 5 minute chart, it's all irrelevant. It doesn't matter. It ain't going to work. Okay. But if you are convinced based on your analysis that this is going to go up, then cool. Okay. Most people get in here and they tell me they're waiting for the MACD. You're like, why? Okay. Okay. So if you're trading this, use stops, buy at support. It's not that complicated. Okay. But the answers do not exist on this time frame. This is just tactics. Okay. It's like randomly walking through Fallujah, kicking down doors and say, any bad guys here? Nope. All right, go to the next door. Kick down that door. Any bad guys here? Right? It's all tactics. There's no strategy. You don't want to be all tactics. You have to have strategy. You have to really know what's going on, and you earn your profits through value creation. And you say, well, I've been a buyer since 33, and my target is 63. So your declaration now is on even like an hourly basis. You might be day trading this. So you might be, where am I? Day trading bullish bias. Okay. So let's look at that. Okay. So what does this tell you? It tells me that you were a buyer at 39,850. And you might have been a front runner here at 39 and some change. Okay. Okay. Now, isn't it interesting that many people will walk in and what are they trading? Like, okay, I guess you're trading this. Okay. Seems to me you should have been trading this. Okay. Okay. How do you pull the trigger on with moving averages? Right there. Can somebody give the link to the free training course at the FX Bootcamp YouTube channel? The one that takes them through moving averages and such. Mohammed says, so it's better to trade daily or weekly swing. What I'm saying is, if you're on a 1 minute chart but you don't know what you're doing, you're going to get slaughtered. Right? Your mother will be embarrassed. She'll have to tell her neighbors and her girlfriends that her child is a degenerate gambler. Okay? You cannot survive on tactics alone. Thank you, Jim. Chand? Okay, Chand, click that link that Jim posted and go through the training course. All right, guys, I'm done. I'm spent. Gotta go. Oh! Okay. The day before a Fed meeting, it's a good day to go golfing. Don't you stink? I also have some MIT work I need to do this morning. So, without further ado, peace on earth. May the pips be with you. May your profits be above average. Thank you to Traders Way. If you need an account, please visit tradersway.com. If you need the training videos are on fxbootcamp.com. If you need my chart templates, that's on metatraders.com. If you prefer to read a book this summer, find my book on amazon.com. Many of those links are in the description below the video. I will see you tomorrow. Have a wonderful trading day. Don't do anything stupid and get yourself